Hey everyone. I feel like a recording is due here. Took me until 1 a.m. to get together and energy to actually do this properly though. So let's do it right, you know? We've been up this week. We've been up a lot this week, actually. If I open up my Twitter page, I haven't been able to record for what, 2 weeks? Minimum. And made a passing comment about how, hey, low IV, and it's just the OPEX that I was worried about. The OPEX where I said to hold off in. Yeah, hold off until at least. And after we rallied. Um, I have, in my own position, reduced my share of warrants by about 50K that I own. And I'm waiting. I think we're getting close to the time where I would want to buy shares and sell covered calls. And so I'm going to walk through the concept there of how that works and what that is. And we're also going to walk through what I think happens, give or take, because I'm not sure this is accurate. This was what I had before, and honestly, it's been blown well out of the water here. But let's walk through it. So let's go straight to ETFs, okay? Because ETFs are telling me stories here. I'm just going to show everything all at once to start with. And we can see that everything did agree that we would go up back in early December, right? Everything agreed that we would be up on the 21st, but not afterwards. There was disagreement. D model thinks we go down slowly. A model thinks we go down slowly, and then B and C model, well, everything thinks there's some sort of swap date around the 28th or 29th. And to add on to that, checking the swaps tab. Am I doing something silly here? I am. Here we are. We have something coming on the 29th of January, and that's okay. So we might go down a bit into the 29th here. Going into it, probably, but we might rally. I'm not sure there. Because we've been rallying and we've been blowing everything out of the water lately. And that's okay, but I typically, on swap days, will assign it downwards on local swap days. And you'll see how we blew one swap out of the rally here when Ryan Cohen bought in. If somebody else buys in heavily here, we might see us get blown out, and then we pump. And we would pump all the way to, well, where is B model looking at? B model's looking all the way to 30. C model is saying, yeah, C model's looking like 30. And if that doesn't happen, then the A and the D models will probably be correct here, and we would just slowly go back to no man's land, where we slowly decline forever. It's times like these where I like selling covered calls, where I don't know what happens, but volatility is high. Bears and bulls have strong opinions, and instead of taking a strong opinion, I can play defensively. And let's talk about playing defensively here. So let's look at GME options chain, right? Let's look at the options chain. I want to move out, let's say 6 months, right? That's July. Actually, let's start here. Let's look at max pain. Well, first of all, I've had the opinion that the breaking of the main model has been due to the creation of the GME1 chain. Okay? And so the GME1 chain is created here, and then since then our rallies have been troughs on every GME1 OPEX. Now we don't have a GME1 OPEX in February 10th here, or February 15th, or what have you. And so it's possible we rally all the way to 25. And that was my opinion here in this trading view that I held, that we would see some sort of gain and uplift, fulfill the 29th swap on January, and then rally. I didn't think we would go up this much, though. Not this fast. Yeah, that was my opinion. Let's talk about now, though. Let's talk about now. I think it's entirely likely we do this, but I also think it's likely we hold the pattern we've held recently, where in this time between, we rally for a bit. And we do truly rally. I would place right here. But once we get into the actual date of the FTDs being due, they crush us. And they crush us down to make sure the FTDs don't come up and get fulfilled here. And that's okay if that happens. Let's talk ETFs. What is the difference between the B and C model and the A and D models? So the B model and the C model have the same basis, except the B model is very heavily slowed in its movement, okay? The C model is based off of having a cash floor hard set to the stock. You'll notice how it hallucinates into this August 10th, 11th area, because what we do is the actual ETF pressure is all the way into a negative, and it's getting a hard walled at a bottom. So I'm artificially enforcing a bottom, right? And by artificially enforcing a bottom, let me just like snip this and let me draw on top of it to show what the effect is, right? So what happens if instead of it supposing to go to right here, let's do red to match, it's supposed to go all the way down here. Well, this movement up would probably be established here. Then we would do this, then we would go down. Then we would go down even further. And then this movement up would be matched here. Down, up, down, and then we would break out. And that's what the D model originally looked like before I started tuning it. It was remove the cash floor, see what the ETFs and FTDs actually do and what they actually say. Okay, but that's give or take what would happen there. And that's why that's a hallucination with my model, and that's what's wrong. Okay, is there a world where this right here and this right here are so heavy that we're reducing this rally, right? And that we're also, this is a negative swap, so we're all the way down here. And then it takes all of this to recover into just here. It's hard to tell. It's deeply hard to tell. But I have the D model for a reason. And the D model thinks we should have rallied by now. Truly, it thinks we should have already rallied, and it thinks we should be on the way down by now. But the A model, and the A model is, let me show what these are, because I have, the A model has every parameter possible available for FTD min-maxing. And so it thinks FTDs have a different value based off the ETF. And that's the theory of the A model, is that it has a cash floor, so it has this hallucination still, right? So it still has the same hallucination, but it thinks every FTD, every ETF's FTDs has a different weight. And it seems to have called this, but it also thinks we go down. Okay. So it's times like this where I look at it and I objectively say, hey, I have a coin flip here. Heads, it's 32. Tails, it's 22. Where I want to play defensively. And so what can I get out of playing defensively, right? When are we going to be down is my own question more than anything else. And so I look at max pains. I know that a GME 1 chain existing means we will probably be down below max pain. And I see April and June are going to be GME 1 chains. And I see max pain for June and July are very low. So what can I get? Let's check the option chain. I would like to see June to start with. Shares, as of recording. All right, closed at 24.01. In post-market, they slowly rose up to 24.64. Fine. Let's say all of these options are priced at 24.01. So I'm going to follow as if they are 24.01. Let's say I start here. I say June. No, let's say July. No, let's say June. Let's say I look at June. I say, hey, I can buy shares at 24 strike. I can immediately sell covered calls on those shares at $3.64. So effectively, if GameStop is above $24, then I make $3.64, right? And in June, I make $3.64. So what is that? 5 months? 364 over 24, and that's 15% in 5 months. Okay, fine. I'm happy making 15%, and this is my really, really slow, really safe money. This is not my gamble-matic money. I already pulled any of my leaps out. I pulled my warrants out. I pulled my leaps out. I pulled most of my leverage out in response to this. Okay, I actually got a large sell of warrants at $4 a pop today. Right at noon. I didn't even think it was going to happen, but it happened to me. Right about there. Yeah. I started getting order fills and they filled all right there. Then we didn't actually go up. And to be blunt, that order had been sitting as a sell order for months. I was surprised by the email more than anything else. Now let's walk into this. So with my hyper defensive, right? I love hyper defensive sometimes, and I love hyper aggressive other times. Let's talk hyper defensive. I like the concept of making 15% in 5 months, doing almost nothing. Right? Now, there is a time when you can make more off of selling covered calls. Truly, there is. More than anything else, you're harvesting IV, okay? When you sell covered calls. IV rank is at the 36th percentile, okay? That's still relatively low for this company. So we haven't topped IV. We haven't hit volatility peak yet. But open up this view. Look at this RSI. This RSI is in overbought, and it could be leveling out. I think it's a change in slope myself when I look at this, right? And so I'm happy to take it on some level. I believe Low Piano had a metric that he liked, which was $1 per month being made, and we're well below that. We're well below any metric for when IV is high and selling covered calls is good. So I might be waiting more. I might be acquiring my shares and, selling the calls when I think we're at our peak. Because if I can do this at 25, we'll probably see even higher IV. And we'll probably see even more of a battleground over this stock price. And that's great for a hyper defensive individual. Okay. For the record, if you believe that there is some sort of hard bottom on this stock price, let's walk through the other concept, right? I get paid what? I pay 24 per share, right? In this hypothetical, I make 364 or 365, let's say, per share on call premium when I sell these calls. So I'm paying $20.35 a share for stock. If in 5 months, GameStop stock is 18 a share, I will be down come when? July, June? It was June. It was June. This is all based off June. Let's check July. July is paying $4 for a strike 24. So I could get $20 a share as a cost basis on GameStop if I'm willing to buy at 24 and sell a strike 24 call option. Okay. Or let's say I think we're actually going to go up. I could give up some premium. I could say if we're above 25 a share, I want that extra dollar. And so at 25, my strike would be filled, and I would make what? $4.40 a pop. Whatever. Okay. But I'll be looking more in my own time and without sharing what position I pick up into selling covered calls, into playing defensively, specifically because my models disagree here. There is a lot of battleground here, and there is a considerable chance we declined right back into no man's land here. Okay. I love the A model right now. I really truly love the A model, what it does and what it says right now at this very moment. Okay. And it says we go back into no man's land. I'm not going to sell raw dog calls. I'm not going to buy puts, but I am open to selling covered calls at several months out expiry, because several months out expiry locks in the current IV you have. If you see it fit, you could sell shorter duration covered calls, and you could get whatever the IV is now for a while. You could get whatever the IV is later instead. It's fine. But I am going to be myself looking for a good time and place to start selling covered calls on this, because this is volatility. We went from 0th percentile here to 36th in the past week or so, and I don't know what happens next. I might acquire shares on the 29th, sell calls on the 30th, because the 29th is a swap day. I might acquire shares now and sell calls with soon trademark, but I do like the concept of acquiring my shares that I have sold my warrants to acquire on the 29th and selling calls by February 2nd. And we'll see what comes with that. But I think we're going to walk right back into no man's land soon. And I also think it wouldn't be unlikely that we dilute, because we tend to dilute into experiences like this. Now, my only withholding for dilution is that would you purchase shares of a company and then have the company sell shares into your own purchase? Question mark. That is, the morality and legality of there is up in the air, and so I'm not sure they're going to dilute this time. They might just let it subside into no man's land. Okay. So we've talked about RSI. Let's talk about Swapinator. So let's do daily. Yes. You will notice Swapinator is at a fucking low here. Okay. Let's draw a ray. Okay. And then let's also draw one at the peaks. Okay. When was the last time Swapinator was this low? It was September 16th. If you had sold on September 16th, you would miss out on a rally to 27.8 because you would have sold at 26.4. Okay? And that's completely reasonable. And if you held out until you went past above this line, you would be buying at, this is when I bought in, when I was originally talking and when I blew the fuck up on the internet for no reason. But this is when I bought in, and then I did not close out when we dropped here. Okay. And like, yeah, that's a little bit accurate. Yeah, it's been a while since we've been this overbought on Swapnator. It's been a while since we've been this overbought on RSI as well. This has been a breakout, and looking at the technicals, these are the technicals. These are technical indicators. We have an RSI, a volume weighted MACD, and a, what the heck is CMF? I've forgotten. Settings. Shaken money flow. I'm going to have to look that up. Flow of money into or out of an asset. Okay, I see. But we have bearish indicators on the share price on the daily. Let's check the weekly. We have unconfirmed. I believe unconfirmed. Let's go ahead and check. Settings. Uncheck. Don't wait for confirmation. Okay, so it's unconfirmed. In other words, the pattern hasn't been stabilized and finalized. There's a possibility we see it. But we have unconfirmed RSI, CCI, momentum, and CMF, all bearish on the weekly. Yeah. I mean, I took profit, right? I'm completely willing to miss out on the run to 27 if we dump and pump, but I might acquire shares on the 29th, right here where I called this low. Let's go daily to show what I'm talking about. Right here where I called a low. But I sold my leveraged assets, you know? I'll give it time to settle because I am weird about liking to do cash trades. And then I like the idea of acquiring here into the swap. And if we completely blow up and miss the swap, fine. This is the 5-year, I believe, on the big boys, you know? This chart's impossible to read when we're using the divergence for mini indicators, but that's fine. So what do I think? Let's go through. Let's write and let's review some of the thoughts and assumptions, right? I believe I wrote on the model this time. Okay. 116. Nope. We missed. This was wrong. We stepped to 116. What were we at? This is daily. 116. We went to 21.06. 117. We went to 20.79. And so we didn't close at 20. We closed at 21. And then 21 minus GME WS price. And so this was wrong. But when that pressure went away, boom. Earnings miss on Q miss. Not a real miss. This is not a statement of fundamental analysis. This is a statement of analyst opinions. Analysts will claim we missed on Q1 and Q4. Q1 will miss by more than Q4, and then we may see volatility between the 16th and February 10th. So this was fucking right in a ridiculous way, and almost immediately right in a ridiculous way. Okay, I'm gonna clear out these. No, I can leave this. I can leave this. Let's write some new expectations. Okay. What do I think is going to happen? Swap date on Jan 129. Okay. Minimum some sort of recovery on the 2nd, but that's assumed with swap dates. I think I think high volatility from the 29th to the 10th. And what I'm going to go ahead and do is I'm going to say, I'm going to move this. This is going right down. And I don't know which one's going to happen. Mhm. But knowing me, I like to have opinions. A model turns out to be correct. That's my opinion. I think A model is going to be correct. I like A model. If I'm taking bets, if I'm taking opinions, I'm following A model this time. Yeah, I like this model right now. Let's step further. Let's step further in. What else do I think is going to happen? The full model, if, and this is if, B and C models are correct, then the full model would reestablish a cycle accuracy. But I don't think that's going to happen. B/C models and full model stay broken. Okay. Is there anything else? Yeah. RSI top out this week. Now, is there anything? Let's go ahead and kill this and look at RSI again just to verify. Yeah. I'm calling a top on RSI just for myself. And a swap on the 29th. And then question mark volatility. I like that. But hey, if you haven't taken any profit, it's time. You know? I don't mean to cause sell pressure, but this is great. This is great for everyone. This should be great for everyone. And I'm moving to defensive strategy now. Yeah, defensive strategy is harvesting volatility until we're at a point where it's smart to pick up calls again, right? And so, insofar as harvesting volatility until it's safe to pick up any sort of opinion again, I think IV is going to go up more. Let's look at that. Let's take an intelligent look at IV. Right? Let's look at the implied volatility suite, and you see how IV has spiked hard. It's not uncommon for IV to keep spiking on us, though. Let's look at a previous example of IV spiking hard. This is an IV spike into getting crushed down before a squeeze, isn't it? This is 2024. This is, okay, so IV does tend to go up during, what is it? Okay. So IV does tend to go up during extreme events and during rallies. Let me go ahead and let me draw a horizontal line right here at our IV. When is the last time we had an IV equivalent? Okay. We have not had an equivalent IV to this week's since 2024. And so it may be a great time to harvest IV in my personal opinion. And so IV harvesting is the safest / easiest money here to be made. At this rate of IV, I expressed how I think I can make either buying shares at 20 a share, 35 a share, or I can make 15% over 5 months. 15% over 5 months is very good for the market. That's what? Clear? Over 5 times 12. That's 36% a year. Motherfucker, if you can show me somebody consistently posting 36% per year gains, I'll show you a damn good investor. Like, so I like that. I like this. I like that. I like the concept that it places me at 2035, which is very fucking close to my cash flow. And so if my calls get, how can I put this? If my calls don't get assigned by this time, I might just sell the underlying stock. Or, like, how can I put this? Or start selling suicidal calls and get rolled into owning shares, or buy back my own calls, that is actually. Yeah, that is the thing. If I don't get assigned at that point, I might buy back my calls if the stock price falls that much. If IV falls, because the IV goes to the 0th percentile, and I showed that whenever we're in no man's land for too long, IV gets crushed down. If I see IV in the 0th percentile rank, I would buy back my own calls and buy more calls, because that's how it tends to work. And so if we go down this low, I would probably end up buying back my own calls and then buying more calls with the money that comes from that or generates from that. So is that where I'm at? Yeah. I think there's money to be made in IV harvesting, or in the wheel that is called. I don't think there's a lot of money to be made in trading options when implied volatility's at a multi-year high, right? Whatever's happening here as well, this is an outlier in some way, shape, or form. And so we could blow up all the way to 32 here. It's truly possible. But I have models saying we blow up to 32, and I have models that say we go right back to no man's land. Okay. There's one other thing that I want to share. This is someone else's opinion. This is Ultimator. I believe Ultimator is a known force in the community, and his own opinion that Michael Burry could be owning strike 32 call options, and that the strike 32 call options could represent a risk to the market maker, and that risk to the market maker they know of. And that is what they're hedging here. They are force hedging a risk of Burry buying in a large position. Because if he excises on a Friday, we would, let's look. If he excises on Friday the 30th, I would probably buy in my shares on the 29th. I would probably be selling my calls on the 2nd to take advantage. But if he excises on the 30th, and if he owns a large number of calls, and if this implied volatility skyrocketing is the market maker tipping their hand that somebody owns way too many calls, then there's something to be done here, Okay. So I think I can play both sides with that. I think I can buy shares on the 29th. Let's look at A model. I like A model. I believe I can buy shares on the 29th on the swap day. Come the 30th or the 2nd, sell my calls, sell covered calls. And if we end up having what the market maker is probably afraid of here, because this is a multi-year high on IV at this point, let's go ahead and edit this and let's look at another IV version. Instead of modeled implied volatility, let's do fixed volatility. There we go. Yes. Okay. This is not accurate to what I experienced. This is 100% not accurate to what I experienced. I'm not using this. What if I do IV? No. Let's love IV percentile. Okay. Yeah, this is accurate to what I experienced. Somewhat. Maybe we could experience something here. Maybe we could go higher. Hard to tell. Very hard to tell. Okay. I think I'm happy with this expression. I just wanted to take the time to express the care that I was here at all to show. I was mostly AWOL for the last week and did not express my own opinions before this happened. And frankly, being present at all can sometimes be a struggle for me still. I'd love to hear your own opinions. I'd love to hear feedback. I'd love for people to actually rip into these models and like make their own. But if there's anything I can do for you, let me know. Otherwise, have a good day. Have a good night. It's like 1 a.m. here.